live. Reverse this camera. There we go. Reverse this camera. There we go. Bobby, Mia, good evening, good evening. Jose Castanastra, how are you today? Finally, been waiting for you. Oh, sorry, just got here. Anyway, good evening, good evening. Dirt Farmer, how are you this evening? Alex, how's it going? David, Jonathan, Balls Deep. Oh, no, that's an interesting name. Okay. Sure your mother would be proud of that one. Jonathan, Band 57. Okay. Alex Rodriguez, Fireball, Dirt Farmer, great. How are you? I am wonderful. Had a good weekend. I love having a good weekend. It kind of makes that, the work week or the stress of the week kind of kick back and relax. It's like you've been working a long week and it's like you just can't wait for the weekend. Well, even when you're retired, there's still that, I don't know, that antsiness in the air. It feels like you should be working, but it's a Saturday. And it's like, oh, you know what? I don't have to get uptight. So I'm still getting used to the retired life. It's definitely strange after working all those years. Hey, James, hope you had a great weekend. I know you only do dividend stocks. You ever look into CC for gold and silver? Futures, long time ago, I used to do that. I used to love doing futures. But unfortunately, with futures, when I was doing it, it took a little bit more time than I wanted it to. Anyway, well, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. So what I'm going to do tonight is I'm going to show you the strategies I taught my 9-year-old daughter. Simple, safe, predictable, consistent, 1% per week. Yes, that's over 50% per year. That's my goal. Now, do I hit it every year? Sometimes yes, sometimes no, but I get pretty damn close. I don't even know what I did last year, 2025. Haven't calculated it up yet. All right, Med, how you doing, Mel? IUA and SLV, how are the premiums? Pop trades, let's take Dirt Farm. I love being retired. Yeah, I'm getting there. I got this next project I'm working on for my retirement. I think it would be great. I can see myself spending the next 3 to 5 years, and I'm going to find out this week if it's going to go through or not. And I was like, yeah, I can't wait. Can't wait to hear it. Kind of excited. One way or the other, either way, one way or the other, it's still moving forward. Who do we have down here? We have Tradezetta, okay. Silent Pascal. Greetings from Mexico. ¿Cómo está, señor? Do you like Arbor Metals? What's the ticker symbol for Arbor Metals, if you don't mind? Beautiful world. Gotta love it. Alrighty, so what is your go-to weekly? Well, that's usually Macy's. Usually. Alright, so let's get started. First thing you need to do is grab a special pen. Great. SIDU. Thoughts on Archer. Hold tight. We got one over here first. Okay, so sit tight. Got one over here. And what was that? Mara. Ooh, we want to look at Mara today. Okay. Alrighty. Hey, it would help if I actually had it on there. Oh, wow. Alrighty, MARA. Here we go. Okay, anytime I look at any stock, I'm always looking for the same 5 things. They're very simple, and they stick out like a sore thumb. You ever heard that expression? Sticks out like a sore thumb. Well, once I point them out to you, you say, okay, yeah, that makes sense. Ready? Number 1, the high. I don't care what size chart am I looking at, 1 year, 2 years, 1 day, 2 days, whatever. I want to look at where's the high. Second, where's the low. Third, where was it a year ago? And fourth, where is it now? And then finally, fifth, what is the direction? What's the momentum? Where is it moving? It's very easy to see down, up, down, up, down. Well, is it turning right there? It looks like it is. I mean, that's what we're looking for. We're looking for opportunities on a good quality company to get at a certain point where it bounces and it looks as if it's going to go the direction that we want it to go. Odds and probabilities. I like to have them in my favor. So let's zoom in a little bit closer because this is the 1-year chart. And before we go any further, I want to check the numbers. Okay, before I even dive deep into the chart, I want to take a look at, is this going to be worth my while? Because my goal here is a simple, safe, predictable, consistent 1% per week. Okay, that's my goal. Okay, so is it going to work? Well, chart first, always. High, low, was, is, where's it going? Now I want to look at the numbers. What is my rate of return if I like this company? So first thing I want to see is the actual price of the stock. Here we go, it's right here. 991, 991, 991, 991. What do you think? 991, right? Okay, so if I'm going to buy it first thing tomorrow morning at 991, the closest strike price is going to be the 10. Keep track of these phones. Okay, it's going to be the 10, which is right there, and it's paying 37 cents per share. Now, right at the top of my head, 37 cents on a $10 stock, well, that is about 3%. Now, if I'm looking for one and Mara is offering me 3, well, I want to dive deeper into it and see all the other details. Because once I do the quick, 3 or 4 second chart exam, high, low, where's the momentum, all that. Once I do that, I want to go look at the numbers. Is it worth my while? Okay, great, 3%. All right, let's check it out. All right, so let's get rid of that. And now let's break the chart down a little bit more. The last 90 days, which is the last 3 months. Same thing. Okay, it should take you 3 to 4 seconds. The high, the low, where was it, where is it, and where does it look like it's going? It looks like it's bouncing off that bottom right there. Looks that way. But let's zoom in a little bit closer to the last 30 days. Well, that's going to give me a better idea of where do I think it's going next. This is the last 30 days. The last 30 days, see, if I'm going to be trading on a weekly basis, I need something that trades every single week. And that's what weekly options are for. So if you're not comfortable with that, hey, it is what it is. Weekly options expires every Friday. Actually expires on Saturday, but at 3:59 p.m. Friday, you can't do anything. So in actuality, they do expire on Saturday, but for you and I, we got to get rid of them before 3:59 p.m. on Friday afternoon. That being said, it looks, well, it doesn't look that way. It actually is at this moment, 30-day high, 30-day bottom. Now, we have no idea which direction is going tomorrow. It's either up or down, or it might just stay the same. But if this day here is the bottom, and this day there is 1 day to the upside, well, I like 2 days the upside, and on the third day, I will jump in. I don't look for bottoms, and I don't look for tops. I'm not that daring. Not anymore. I'm retired, so I take it slow. APLD to the moon. Took your advice on Friday. No, Rich, it was not advice. It was an observation. Okay, remember that. Okay, I don't give advice. I don't give tips. I give observations. That means you give me something to take a look at. I take a look at it. I just give you my opinion. That's all it is. It's not a tip. It's not a recommendation. All right. Let's go. All right, so personally myself, I'd give it 2 more days going up, bouncing off the bottom, then going up before I jump in. That's my personal opinion. But you do what you think is right for you. All right, next. Oh, wait a second. Let's do it anyway. We need something to throw on the board. So why not do Mara at 10 for tomorrow? And here we go. We're going to do just one contract. And for the market, and this is what it should look like and sound like. By one covered call of Mara. 9 January 26. That's next Friday. That's actually this Friday coming up. Next Friday, this Friday. Anyway, the 9 January, that's this Friday. The 10 call option. So if I'm buying it for this price here at $9.91 and I'm selling it for 10, I can pick it up. I'm going to say no to that real quick. It's $1.50 per contract. $1.50 per No, is that even worth my while? Gonna put up $1,000 to make $1? No. Well, see if the numbers work. Apparently not. Let's get out of that one. It didn't look that bad a little while ago. Oh, that could be it right there. After hours trading. After hours trading makes the numbers go wonky. All right, anyway, let's get back to where we were. The way we were. Okay, right there. And what do we have down here? Any advice to help my mom and her back when I am older? I am 14 and she deserves everything because she is a good mom. I need to pay her back to show my appreciation. Okay. Got to delete that. Not that I'm a bad person or anything, but 14-year-old should not be here. Okay. I just, no. Sorry. That happens every once in a while. Someone underage will come to the chat and it's like, no. All right. Sav wants to take a look at American Airlines. All right, so American Airlines. There it is. First thing takes me 3 to 4 seconds. High, low, where was it? Where is it? Okay, let's take a deeper dive. What the numbers look like. 1548. The 1550s are going for 30 cents. That's more than 1%. Let's take a look. Let's take a gander. So, a year ago, need the glasses for this one. Either that or I need a bigger screen. A year ago, we're at 1766. The top of the year was the end of January, and that was 1905. Okay, we bottomed out in April, 859. The last 90 days, take a look. High, low, where was it? Where is it? Up, down, up, down, up. That is a definite upward trend at the moment. I mean, that's easy to see, right? It's actually that simple. What does it look like? Well, it looks like that. And it looks pretty damn good to me. Now I want to zoom in closer for the last 30 days. That way I get a good idea, where do I think it's going next? 30 days would be right about there. Now that definitely looks like it's doing what it looks like. Seriously, take a look. It looks like it's doing what it looks like it's doing. Okay? Up, down, up. I mean, that's what it looks like. Okay? Up, down, up. I mean, how much more can you... And look, 30, okay, here's the pullback, the 30-day top. Here's your pullback. Okay, here's the bottom. 1, 2 days up, and then on the third day, I jump in. So, yeah, had I seen this, I would have jumped in the other day. But no, I didn't see it. I don't see everything. But if someone had pointed that out, I would have taken a look at it and said, oh, let's put that on the list. But no one pointed it out. Perfect setup. Look at it. Shoots up, gets to a high. People start taking profits. Bottoms out, turns around. That's what they normally do. They go up, people take profits. It comes back down, gets to a bottom. People start jumping in again, and it goes right back. That's all they do. They go up, they go down. That's it. There's no big mystery. It goes up high enough, fast enough, people take profits. When they do, stock drops. When it does, it gets to a point where people say, wait a second, I still like this company, jump back in, and it goes back up again. The strategy was created for a 9-year-old. It had to be simple. I think that's pretty damn simple. Okay, it went up, people took profits, it went down, now she's going back up again. So now the strategy. Okay, let's do it. Let's do it, the 1550. All right, let's do this. Get rid of that. The 1550, there it is. One contract, that way you can get an idea. If one contract costs this much, well, then I can afford to do however many you can afford to do. Buy one covered call, American Airlines. 9 January, that's this coming Friday. The $15.50 call option. If I'm buying it for $15.48, selling it for $15.50, I'm still walking away with a profit of $25 per contract. Each contract is $1,500. So let's do some math. What rate of return is that? But remember, that's for 1 week. Well, let's find out. Okay. Magic mirror on the wall. Show me my calculator for one and all. Anyway, all right, so 25, to find out the rate of return, you take the profit, $25, and you divide it by the investment. Well, this particular situation, it's 1525. 1525, it comes to a grand total of 1.6% for 1 week. Think about it. My goal is a simple, safe, predictable 1% per week. Well, this American Airlines, if you like the company, this week, this play is 1.6%. Now think about it. 1.6 is not a lot of money, but it is over 50% per year. And I'd like to think 1.6 times 52, that might even be 70%. Maybe, could be. I don't know. Annabelle. Good evening, Annabelle. Good evening, Dev. What's happening? All right. Next. Oh, let's save this one. Let's save this one. There it is. I can get rid of some of these things. There it is. American Airlines. 9 January. $15.50 call option. Profit's $25. The investment is $15.25. Well, that's a nice 1.6%. Now remember, 1% a week is 50% or more per year. So 1.6%, well, that's got to be at least 70. Anyway, I like it. Let's. Yeah, you do what you got to do, damn thing. Temperamental, I guess. All right. PLTY. Why do we want to look at PLTY? Why do we want to look at PLTY? Pulte Group? I don't know. Delete. And back to where we started from. PLTY. Yield max. Okay. Oz driven. Whoops. Gotta get right screen. There we go. PLTY. Do you notice this? January, February, March, June, January. These are months of the year. Now, don't get me wrong. There's nothing wrong with doing monthly options. I just don't do them because they don't pay enough. I mean, think about it. If I'm going to interrupt my day, 10, 15 minutes a day, just that's all it takes, 10 to 15 minutes to take a look at my portfolio. I want it to be simple, safe, predictable, all that kind of stuff. And I don't want to spend a lot of time with it. Monthly options requires a little bit more effort. And you got to figure out where's it going to be in 30 days as opposed to just 5 days. Think about it. It's easier to predict a movement in 5 days than it is to figure it out in 30 days. So I just don't do the monthlies, and they don't pay as much. The weeklies actually pay more. It took me a while to learn that one, but I did. It's like, oh, yeah, good. So I don't do monthlies. The numbers just don't work for me. Sorry. I like that 1% every week, not 1% every month. All right? Sorry about that. Call Caden. Good evening. What kind of questions do we have here? Ooh, somebody wants to take a look at Dell. Oz. Thanks for that, Oz. Rick Bruner wants to take a look at Marvel. MRVL. Ooh, look at that. I like that. That looks cool. First thing I want to see. Well, my eye went right to it. Okay, I've been doing this long enough. First thing I notice is that right there. But for all intents and purposes, it's where's the high, where's the low, where was it, where is it, what's the motion? Okay, well, right there is what's happening right now. Let's zoom into that a little bit because so far that looks okay. And, well, 89, 39. Ooh, the 90s are paying 210 and 89 is going 250. I might do the 89s because it's a safer trade. Well, let's take a look at it. Take a look at the numbers. How about we look at both the 89 and we'll look at the 90, see which one looks better. Why not? All right, so the high of the year was a little over a year, it was almost a year ago, 127. Bottomed out in April at 46.72. All right, look at the last 90 days. That's just the last 3 months. Can you see that pattern? It's like right there. It sticks out. It does. Look. Up, down, up, down, up, down, up. Doesn't that look cool? Anyway, besides the point. High, low, was, is. Hey, there's the movement. Anyway, I do say that a lot, don't I? Last 30. The last 30 days gives me a good idea where I think it's going next. There's a bottom here. Definitely going up. 89.39. The closest one is going to be the 89. And that's paying 250. Okay, that's over 2%. I like over 2%. Because over 2% every single week comes to over 100% by the end of the year. That's doubling my money by the end of the year. That could be a good thing. Let's take a gander at it. Let's change this to covered stock. The 89 right there. One contract at the market. Here's Johnny. Tell him what he's won, Bill. Buy one covered call, Marvel. 9 January 26th. That's this coming Friday. The $89 call option. I'm not buying it, I'm selling it. I'm buying the stock, selling somebody the right to buy it from me for the same price I just paid. Isn't that weird? I'm buying something, I'm selling it to someone else at the same price I just paid for it, maybe a couple of pennies off, and then they pay me for that privilege. Let's do this. Anyway, here's the profit, 105. Here's the investment, 8,700. So think about it. Okay, you buy a company, especially one that you like, because I got simple rules. Number one, never buy something you don't want to own. So if you want to play the game, make sure you play it with the intention of whatever you buy with the intention of holding it long term. Now, the bonus of getting 1% every week with collecting the premiums, not only the dividends, but the premiums also every 7 days, every week, Think about it. It's adding another stream to your revenue. I mean, you're going to be investing for the long term anyway, because if you're retired or you're thinking about retiring, well, people buy stocks mainly for the long term investment opportunity. But here's just a little bit of a twist of you buying the good companies that you'd want to buy anyway, but you're selling covered calls against them every single week in order to generate some cash flow. So I'm retired, I want to get cash flow. Okay, the government's definitely not taking care of me, you know, and I don't want to do that Walmart thing. God bless those guys that do it. I just, 50 years, I'd like to think that I don't have to. Okay, so that's what I'm trying to do. I'm trying to continue my lovely winning streak and just keep on doing what I'm doing and sharing with you good people, and also making a video dialogue for my kids and my grandkids. So when I'm gone, they'll have something to go by and say, how did Dad actually do it? And how come I can't get my inheritance without knowing this stuff? Little do they know, they have to know all this stuff before they get their inheritance. Maybe that might get them motivated to do something. Who knows? Anyway, let's keep on going. So, let's check out the rate of return on this one for that same thing. It always comes down to that pesky old math. Remember that in high school, junior high? I hate math. Well, I didn't. And it comes in handy. And think about it. We're all adults. We know how it works. You work 40 hours a week. You get X amount of dollars per hour. Yeah, math. Go figure. Oh, you want to buy a house? You want to buy a car? Well, you need a better paying job. Yeah, it comes in handy. So let's do this. Take the profit, 105. Max profit. Remember that part where in my intro I said, hey, I'm looking for a simple, safe, predictable, consistent 1% per week? Well, when I say simple, the covered call is one of the easiest strategies. It is. Okay, when I say safe, it's one of the safest also. It's one of the few strategies that you can do in your IRA. So the government allows you to do the covered call in your IRA. So predictable, I know what my profit's going to be before I even do this trade. Most people buy a stock and wait for the stock to move before they realize a profit. No, I'm a little on the lazy side. I don't want to sit around. And it's funny because here I am giving my opinion on doing things, and I'm telling you that I'm actually lazy and I don't like doing all the work. Well, 5 or 10 minutes a day is all it takes me because I've been doing it so long. And it's actually simple because remember, it was created for a 9-year-old little girl. Simple, safe, predictable, consistent. Okay? It's not that difficult. You go there because you're going to retire anyway. And all that money you worked for, whether it's in a 401k, whether it's an IRA, whether it's in a SEP, no matter where it is, when it comes time for you to retire and that thing needs to pay you or give you some type of return, yeah, when you get to that point, yeah, 1% a week is nice. Trust me, okay? If it wasn't for that 1% a week, I'd still be working. Not happy about it either. Anyway, all right. So, simple, safe, predictable, consistent. Predictable, I know what the profit's going to be before I even do it. That way I can decide whether or not it's even worth my effort. Because what am I looking for? I'm looking to stack all the odds and probabilities in my favor. By using dividend stocks, I know when the stock is going to move because most dividend stocks are very predictable. They move in a pattern year after year after year. Just before they get ready to pay a dividend, the stock has a tendency to go up in price. And by knowing the stock is going to go up in price, well, it all depends on what strategy you use. You ask, and I actually do this, you ask anybody about, hey, if you knew a stock was going to go up on a certain day or a certain week or a certain time frame, what would you do with that information? And most people say the exact same thing. I'd buy that stock. Well, it's not the worst thing you could do, but think about it. A trading strategy known as the covered call or a buy rate, whatever you want to call it, okay? It's simple, it's safe, it's predictable, and you know what your rate of return is going to be. And the stock doesn't really need to move very much at all, which is kind of cool. So, let's keep on progressing forward. So we know what the profit's going to be. We know what the investment's going to be. Cost of trade, including commissions and fees. So let's find out what the rate of return here is. So 105 is the max profit on this particular trade. And then I'm going to divide it by the investment. 87.95. 87.95 gives me a grand total of 1.2%. Or 1.19, whatever, 1.2%. Okay, now I'm looking for 1% a week because that's over 50% per year, but 1.1, all right, I'll take it. Why not, right? And do I like the company? So that's a big question you need to ask yourself. There's a couple of questions. Number one, does it make sense? Number two, do I think I can do it? You should be able to. It's not that difficult. And there it is. There we go. Marvel. January 9th, 2026. Yeah. 9 January 26th. That's this coming Friday. The $89 call option. 105 is the profit. 8,700 is the investment. Think about it. Any investment you make, you're going to want some kind of rate of return. Well, do you want to invest on a weekly basis, monthly basis, quarterly, annually, biannually, 5 years, 10 years? How long do you want your money tied up for? It's an interesting question. Think about it. You got to put your money somewhere because at some point you're going to retire, which means the money you accumulate along the way is going to have to take care of you in your golden years. Mine's pretty damn good. I'm having a good time. All right, that's Marvel. 1.2%. $1.2. I figured out that one. I forget what it was. Alrighty. What else do we have? So that's 15.25 per 100 contracts. Tony, I'm not quite sure you got that. Rick, we looked. Okay, Tony, you said something. So that's 15.25 per 100 contracts. I'm not quite sure. I don't want to answer that one because I'm afraid I'm going to be wrong. Anyway, Joe Berman wants to take a look at Dell. So let's take a look at some Dell. I do like me some Dell. And here we go. Dell. Here's the high, the low. Where was it? Where is it? Down, up, down, up, down, up. Sideways. They're going sideways for the past week or so. I don't know. Maybe we'll zoom in a little bit closer, see what she's doing. But before we do that, what do the numbers look like? If I'm buying it tomorrow, 127.80, the 128s, 257. Hell yeah, the number looks good. So let's check out the chart, a deeper dive, see does it make sense? Is this the right time? Buy me, buy me, buy me. Is that what it's saying? I don't know. Let's go take a look. Hi. Hello, look at the movement. Whoops. Down, up, down, up, down, up. I want to zoom into that and see what's going on there. Same thing. High, low, was, is, up, down, up. Okay. Last 30. That gives me an even better idea where I think it might be. Come out, wherever you are. Here we go. Well, now that looks pretty clear, doesn't it? That's pretty clear. At least it looks clear to me. All right, so I'm going to do Dell at the moment at 128. See what that looks like. It sounds delightful. Covered 128 right there, one contract. And here we go. By one covered call of Dell, 9 January, that's this Friday. The 128 call option, 290 is the profit, 12.5 is the investment. Now think about it. I like to look at it this way. I'm creating a weekly cash producing asset. Something that I can trade on a weekly basis that I don't really have to take too much attention to. I mean, think about it. At the end of the keyboard, okay, bing, 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 yeah, that's it. Believe it or not, that's actually it. It's like, okay, Dell, I like Dell. Okay, 500 shares, yeah, okay, do this, do that, boom. That's basically it. Find the good companies that you like. Put them in a rotation directly related to the dividend date, because each company pays a dividend the exact same time, year after year after year after year. And if they do it last year, the year before, and the year before, most likely they're going to do it again. Odds and probabilities. Is it guaranteed? No, it's not guaranteed. But I tell you what, if I never, ever, ever buy a stock that I don't like, that's not consistently profitable, and increases their dividends and their profits year after year after year, if I buy it too high and it still drops, at least the company's increasing their dividends and paying me more money every year. And I get to collect something every single week on that position. So I look at it as a win-win-win situation. Okay, number one, never buy something you don't want to hold long term, because sometimes you just might have to. Number two, never sell at a loss. It just doesn't make any sense. Okay, you don't make money by selling for less than you paid for it. Number three, and this one blows my mind, make sure the company's consistently profitable. Why would you put your money in a company that's not, why? It makes no sense. If the company's not making money, why do I want to put my money there? 4, weekly options only. For me. That's for me. You guys got to decide what works for you. Okay, I've been playing this game long enough. It's really simple. Good quality company, buy it at the right time. Sell somebody the rights to buy it from me for the same price I just paid for it. And maybe collect the dividends at the same time. I mean, what's wrong with that? Anyway, Dell. Let's see what the rate of return is. I do get sidetracked once in a while. I would apologize, but hey, that's the hassles of being me. All right, 290 is the profit per contract. So one contract, well, it's $12,000, but the profit for each contract is $290 per contract. Okay, anyway, divided by 12, 5, 10, and I hit the button one time too many. Damn it. Let's clear that and do it again. 290 divided by, that's the profit, 290, divided by the investment, $12,510. 2.3%. So the question you need to ask yourself, besides does it make sense, do I like this company? Dell. Am I okay with whatever happens with that company if I decide to invest in it? That's the question you need to ask yourself. You need to do the research and say, is this a company I'm okay with buying? So me, I would buy it because yes, it is on my list. So when it comes up, once it makes it to my list, it's not whether or not what the price is or should I buy it. I've been doing this long enough. Dell comes up on my list. Hey, this is the time that they're doing their dividend and I should be looking at it now. I don't even look at the information on the company because it's already on my list. Okay, remember I said never buy something. Okay, so never choose a company you don't like. Well, Dell made it past all that stuff. So anytime it comes up at the right time, I will buy it. grab my little profit. I'll hold on to it if I have to. But I'm looking to jump in, get a small profit, and then jump out, and then wait for the dividend payment to come again. Because guess what? It comes every 90 days, every 3 months, every quarter, the same date every year, after year after year. The dividend dates are the same, almost exactly. You take a look. You take a look at historical performance and the historical numbers. When do they pay their dividend? Over the last 10, 15, 20 years. Look at the dates. They're almost identical. You know, the first week in April, the first week in April, the first week in April, the first week in April. That's when they pay their dividend. First week in April. Well, when are you going to buy the stock? The first week in April. It just makes sense. Anyway, that being said, let's move on. 2.3. Let's save that one and move on to something new. Two point three. There it is. Here we have it. Dell by one covered call. 9 January. That's this coming Friday. The 128 call option. 290 is the profit. 12,000 is the investment. That rate of return is 2.3% for 1 week. But here's the thing. What if the stock goes down? Are you okay with owning it and holding on to it? And then doing another covered call next week to bring in some more money. Even if the stock goes down, you still have the ability to sell a weekly option contract against it. So why not? If the stock drops, yeah, so what? Drop your strike price a little bit. Follow it, watch. It's kind of like having a plant. Somebody comes and brings you a rose bush. Here you go. Here's a rose bush. Here you go. Yeah. Well, you got to take care of it. You have to tend to it, feed it, water it, put it out in the sun. Same thing with your stocks, your money. You need to take a look at your money. Tend to your garden. Okay, where are you putting it? Is it someplace safe? Does it give you a return on a weekly basis? Either it does or it doesn't. Next, what do we want to look at next? Okay, we just looked at Dell. Tony, one contract. Do you, AGNC is a good stock for beginners using this strategy? Oh, Soprano, Texas. AGNC, you say. I could say no right now, but I'll do all the work for you, show it to you, then tell you no. Because no for AGNC. And I'm going to show you why I'm saying no to AGNC. AGNC. I'm not just saying no for no reason. I'm saying no because of this. Are you ready? Oops. Looking at the wrong screen, aren't I? This is 2.3. 2.3. There we go. What are we looking at? AGNC. All right. So AGNC, Soprano, Texas. This is the reason why I said no before we even said anything. Well, because I've been looking at this stock for quite a while. You see the premiums right there? 0, 0, 0, 0, 0, 0. There's no money there. The only money you're going to make is in the movement of the stock. And it's just like every other stock in the stock market. They go up, they go down. They go up, they go down. I like predictability and simplicity. Okay? I like to know that the stock usually moves at a certain time. And is it worth it for me to do it? Okay, here, no. The premiums just really aren't that good, in my opinion. Can we check out Wolf? Lisa G, how are you tonight? Wolf, WLF. Let's try it this way. WULF. ULF. ULF. WULF. 3 times the charm. There it is right there. 3 times the charm. Okay. High, low, where was it? Where is it? Down, up, down, up, down, up. That looks good. 1274. I might do the 1250 or the 13. Let me zoom into that a little bit closer. So the numbers look good. The chart, the one year chart looks good. So let's zoom in and look at the 90 first. Let's take a look at the highs and the lows. A year ago, we're at 647. We bottomed out in April, just like almost everything else, at 209. We're looking at a stock at 209. That's almost like pocket change. The high, the end of October at 1715. Well, look at the last 90 days, the last 3 months. Basically the same thing, up, down, up, down, up. That's it, plain to see, easy. Top, bottom, same thing. Up, down, up, down, up. It's so easy to see. I love it when it's that plain and simple to see. That's a good pick. Let's go. Here's the last 30. The last 30 days. You can plainly see it where I shouldn't need to point it out. I shouldn't need to point it out at all. It's that plain and simple right there. Here's bottom right there. 1 day up, 2 days up. Tomorrow I'll be looking at this thing and seeing, is it breaking that right there? And if it does, that's where I would jump in. And yes, I'm going to write that one down. Alrighty. So let's do that one. See what it looks like. Get rid of that. That there, and the 13 even. Right there. 1 contract. Makes it easy. Here we go. Buy 1 covered call, Wolf. 9 January, that's this coming Friday. The 13 call option. Here's the profit, 59. The investment is 1,200. Think about it. Weekly cash producing assets. Every single week, every stock position I have gives me something in a return. And if it's 1% every week, I'm a happy camper. So I like this one. Let's check out the numbers. $59 is the profit. We're going to divide that by the cost of the trade, including commissions and fees. $12.41. I'm going to do that one again because that came up 4.7. I could have hit the wrong button. Hold on, let's do it again. I like 4.7. Don't get me wrong. Okay, profit, 59. Cost of trade, including commissions and fees, 12.41. So let's try it one more time, see if I got it right. 59 divide 12.41. No, I was right, 4.7. Yeah, I'm going to save that one. Oh, wow. $4.7. Buy one covered call. 9 January 26th, that's this coming Friday. The $13 call option. 59 is the profit. 1241 is the investment for a 4.7% for 1 week. If, of course, if you like this company. You should always do your due diligence, research. Does this fit my objective? $4.7. Got to love it. Gotta love that one. Okay, Oz Driven. I own a lot and it's dropping and I'm concerned. Okay, Oz, let me see what you're doing. All right. Oz, I'm not seeing what you're looking at here. Oh, I own it and it's dropping. Oh, wow, I missed all these questions. Holy cow. Holy cow. All right, Oz, I'm not seeing the question, dude. Not seeing the question. Okay, John wants to take a look at Archer. All right, so we're done with this one, Wolf. Done with Wolf. Next on the list, Archer, A-C-H-R. Is that Archer Aviation? A-C-H-R. Archer Aviation. Okay. Interesting. Why are we looking at this? All right. The high, the low, where was it? Where is it? Look at the motion. What's going on right there? Before we do that, 813, the 8s are going, no, okay, yeah, 850s are going for 12. That's over 1.5%. Why not? Do I like Archer? I don't invest in it, but somebody likes it, so let's take a look at it. All right, take a gander. A year ago, we're at 1156. Now, we bottomed out in April like everything else did, 542. Well, from there, she's a little up, a little down, a little up, a little down. Kind of moody, you know. Okay, we get the high of the year back in October, and that was 1462. Well, we bottomed out right there. Shoot up, back down, back up, back down. It looks like she's turning again. Looks like it has a nice little momentum. See? Up, down, up, up. Nice little momentum. Nice little, 1, 2, 3, 4, 5, 6. 6 down days in a row. Now she's coming back up again. It looks like. Okay? Now, does it make sense? Well, let's check it out. Let's try the 8s. Let's try it at 8. Why not? Somebody's got to like Archer Aviation. And here we go. This is what it sounds like. Buy one covered call, Archer. January 9, that's this coming Friday. The $8 call option. The profit, 12 bucks. The investment, 788. I'm kind of curious about that one. Calculator, profit, 1250. And the investment is 788. That's 1.5%. Well, why not? I gotta write that one. Which is this one, Archer? A-C-H-R. 1.5%. 1.5. Why not, right? 1.5. Come on. And there it is right there. Archer Aviation. By one covered call, ACHR. 9 January 26th. That's this coming Friday. The $8 call option. 12.50 is the profit. 7.88 is the investment. For a 1.5% return. For how long? 1 week? Well, what's wrong with 1 week? Think about it. 1.5% every week for a whole year? That's got to be at least a 70% return. Anyway, next. Next. Darn thing. Next. What do we have next? Oh, SIDU. SIDU. All right, well, let's try it out. SIDU. I have no idea what that is or who they are. Back to where we started. SIDU. Okay. SIDU. No. SIDU. Citus space? No options, no thank you. Yeah. No. Colby. Spider. Spider wants to take a look. Colby. C-O-L-B. Columbia Baking System? I have no idea what that means. Hell no. Who came up with that one? Spider? I don't do monthlies. They just don't work out for me. January, February, March, May, August. I want weekly options only. Okay, Sandani, sand on my feet. So I already looked at it, doesn't work. What else do we have? How's Macy's looking? Mara looks good. K-Van wants to take a look at Macy's. Macy's. High, low, where was it? Where is it? Look at the motion. Down, sideways, up, down, up. What's going on right there? Before we look at that, 22.75. Well, the 23s are going for 28, and that number works. Let's take a look. Fatara says that's terrible advice. Okay, not quite sure what the advice was, but alrighty then. Would you recommend Exxon or Chevron? Sit tight. We'll take a look at that one. So let's take a quick look at Macy's and see what Macy's is doing. A year ago, Macy's was at 1702. Bottomed out in the year at 950. That was back in April. Look at the last 90 days. The high of the year, the low, where was it, where is it? Look at the motion. Up, down, up. That's easy to see. What's the last 30 days looking like? Because the last 30 days gives me a better idea of what do I think it's going to do this week. Now that looks pretty obvious. Okay, down, up, down, up, down, up. Is that easy? Can it really be that easy? Well, it looks like that. Now, is that guaranteed? No, not at all. But you need to ask yourself the question, do I like Macy's? Am I okay with putting some of my money into Macy's? That's a question only you can answer. No one else can answer that question but you. Do I like this company? Do I want to put my money into it? Let's grab a seat, answer some questions for a little bit. Now, what kind of questions do we have? Okay, Cillian Ray. Would you recommend Exxon or Chevron or neither? Well, actually, both of those are on my list, but I look at them when they're ready to pay their dividend. That's way I get an idea of what direction does it go based on what it did over the last 10 years. If it made the same predictable move every 10 years, well, I'd be leaning towards doing it just on that basis alone. That's not for the observation option. Okay, that's horrible advice. Okay. Bill, SPCE. Isn't that Galactic Air? SPCE. Virgin Galactic, yeah. Okay, now we did look at these the other day. I'm not quite remembering what the outcome was, but Sav wants to take a look at Moderna. Okay, Sav, we'll take a look at that in a little bit. What are we looking at here? Okay, the high, the low, where's the motion? What's the last 30 days look like? I mean, you look at charts enough, you get a good idea where it looks like it's going. I mean, follow the bouncing ball. I mean, come on, we learned that in elementary school. Follow the bouncing ball. It looks like it's going up. Okay, fine. So, the 350s are going for 10 cents. Think about it. It's 10 cents a share, but how much is each share? Each share is only $3.50, and you're getting a 10-cent return on a $3.50 stock. Well, that's very close to a 3% return for 1 week because it has it every single week. So let's take a look at it, see the numbers. Suave Have wants to know where do you acquire the lists. Okay, Have, Google. You ready? You got a pencil, paper? Okay, here it comes. First list, Dividend Kings. A bunch of companies that have 5 decades of consistent profitability. Consistently profitable for 5 decades. That's 50 years, a half a century, a very long time. Okay, consistently profitable year after year after year. Dividend Kings. Okay, second list, Dividend Aristocrats. Same theory, but only 25 years of consistent profitability. Only think about it. The company's only consistently profitable for a quarter of a century. Does that make sense? It either does or it doesn't. Third list, Dividend Champions. Again, a quarter of a century of increased profits, 25 years. The rules are a little bit different between the champions and the aristocrats. All right, I'll admit that. But still, 25 years of increased profits. List number 4, the dividend contenders. 10 to 24 years of increased profits. It depends on how much leeway you want to give the companies which you put money into. But for me, I like 2 decades. That's 20 years. I think that's a good amount of time. I mean, the stock market's been around for 400 years, so why not? Think about it. Why not? 2 decades. Anyway, next. Niculator, how are you today? All righty. Fighting Bulls, AIS. What is that? AIS. Oh, it's an ETF. No. Okay, not the fact that I don't like ETFs. I just don't do monthlies. Sorry. Hexton, how are you? SLV. Oh, SLV. Hell no. Look at where it is. Why would you look at something that's at an all-time high? It just doesn't make any sense. Pink Sheet Options. No. I like options are good quality companies. Rich Scallion, any observation on SLV since it has option expiration multiple days and weeks? Okay, I see that, Rich, but it's at the top. How much longer do you think is going to go up before people take profits? I mean, it can only go up so far before some people, it only takes 1 or 2 people say, you know what, I'm taking my profits. They jump ship. And then what happens? Well, then it's just like a domino effect over and over and over again. More and more people selling. Anyway, where can we acquire the list? Oh, I've just said that. That's a no, Tin Sender. Okay, pink sheet options. Yeah, not for me. Another lame selling. What? I have no idea what that means. Eric, Intel. Alrighty. ELEC is the ticker symbol going to 18 great entry points. Never heard of it. Anyway, Eric wants to take a look at Intel, and Intel is on the list. INTC. Nice. I like that movement. Market cap less than $1 million. Yeah, I got that. Alrighty, let's take a gander at Intel. Top, bottom, where was it? Where is it? Up, down, up, down, up, down, up, down, up. Look at that movement right there. That looks promising. It looks very good, very good, very good. All right, glasses. Let's do this. A year ago today, 2047. Now, we bottomed out in April just like everything else, 1755. Topped out right the beginning of December, 43.84. Okay. Last 90 days, the last 3 months. Look at that pattern. Okay, not only am I looking for the high, the low, where was it, where is it, and the momentum, I'm also looking for patterns. Okay, down, up, down, up, down, up. See how easy that is? Created for my 9-year-old daughter. She said to me one day, Daddy, what are you doing? Can you teach me? My 9-year-old daughter wanted to learn how to invest in the stock market at 9 years old. All right, okay. Simple, safe, predictable, consistent, and no way for her to lose. That's the strategy I had to come up with. And that's what I'm giving you tonight. Next, let's do this one at 39.50. That looks like a good number, 39.50. The last 30 days. Check it out. What do you think? Last 30 days. 30-day high, drops to the 30-day bottom. Now she's going back up again. How far up? We don't know. It goes down, it turns around, goes up. It's going to go down when it's done, going up. And some of these things are just like so obvious. It's going to go up until it's done going up. And it's going to go down until it's done going down. The only thing we can do is just go day by day and just wait one day at a time. What is the stock doing? Where does it look like it's going next? Well, this one is pretty obvious. So, got a couple of questions now. Do I like Intel? Do I like Intel at this price? Is this a company that I can put my money into and do a covered call every week, bring in some money every single week? Why not? It's there. All you have to do, if you like the company, do your own research. You say, you know what? I like it. Let me buy some at 39.98. Let me sell it at 40. Let me pick up 2% this week. Let me pick up 1 or 2% next week. 1 or 2% the next week. Over and over and over again. By the end of the year, 5 or 10 minutes a day comes to a 50% return or better. I don't know. It sounds pretty damn good to me. All right. Tell you what we're going to do. We're going to call it an early night tonight. I will see you guys again tomorrow. And we'll pick this up again tomorrow. Have a great night, everyone. And now the end is near, and so I face my final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain. I've lived a life that's full. I travel.